Good afternoon, everyone. Good evening. Good afternoon, good evening, wherever you are in the world. This is Mark. Thank you for joining me for another Greenbridge video technical analysis. This is a live stream. So if you're not familiar with how I conduct these, please share the symbol that you would like me to evaluate right now in the chat, okay, whether it's a stock or another market, whatever it is, please share it now so that once I complete my analysis, I can get to the chart you'd like to see. I want to really try to keep this at about an hour today if I can. I have a tendency to go over. Okay, so again, thank you again for joining me. Let's get this thing started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, before I get into it, I just want to mention this. If you're new to the channel, please make sure you register for the channel. Also, please press the like button if you like the videos that I do. And check out greenbridgeinvesting.com. We have a trade signal. We have a swing trade signal service by text, by email. We also have a chat room, and we have a portfolio management ideas by email. And there's a lot of value there, okay, especially for the prices that we have right now. We have a 7-day free trial. Check it out because this is it. Like after this holiday situation, the prices are going to go up, and you could lock in our low prices that we have right now. Okay, so today is Monday. It is a holiday week. And the first thing that we have to do before we talk about the Bitcoin relationship, which is very important, a very important topic that I want to make sure we all understand. The first thing I want to do is get into the economic calendar. This is very important, especially if you are interested in Forex trades. Forex has been very tough over this previous month and month before. I suspect it has to do with the election situation because there's a lot of uncertainty as far as monetary policy. Because if a new administration, takes over, that's going to have an effect on monetary policy, right? So if monetary policy is uncertain right now, that means there's nowhere to go for the dollar, right? And that's probably, I suspect that's why Forex has been tough. But anyway, let's take a look at the calendar here. Now, there's some important notes about the holiday week. Today is Monday. We see some average volume today. As the week unfolds, volume is likely to dry up. Now, we are in an unusual global situation compared to previous years, okay? But the pattern that I've seen over and over and over again is during the holiday week, which is typically an optimistic time, volume starts out decent, and then it just slowly gets smaller and smaller. What that typically means is market moves are less and less. Now, it doesn't mean a market can't have a large move on no volume. It can happen. But just something to keep in mind. This is not a week that you want to be going into aggressive trades, okay? It's a good time to do more research and prepare for the following week as we get into the holiday season. Now, with that said, let's get into the calendar. So today is the 23rd, okay? We had earlier in the day, we had some German numbers. Again, as we could see, the Forex market, as we'll take a look at the euro and the pound, had a sharp turnaround, okay? A pretty unusual move, especially in such a uncertain time, okay? So we'll take a look at that. The European market PMI, again, that's out. That was out at 4 a.m. So obviously that's priced in now. Hey, Christian, and hey, Jay, nice to see you. All right, so then we have on the 24th, which is tomorrow, or forget trade balance, who cares? Australia, who cares? We have Japanese Bank of Japan Governor Kuroda speech. I wouldn't worry about it, okay? Then we have the Royal Bank of New Zealand. They're speaking tomorrow. What is that? 5 p.m. Eastern time. Those are usually not big market movers. And then look, Wednesday, which is the day before the holiday here in the U.S., right? We have a couple of we have some U.S. numbers right here. And we have FOMC minutes. Now, like I said, Wednesday is the day before Thursday. Thursday is a Thanksgiving holiday here in the U.S. No one is going to want to be in front of their computers. Okay, when I'm talking about no one, I'm talking about large players who actually have the money to move markets. They're off having fun. Okay, so I would not expect Wednesday to be a very dramatic day, especially after this information comes out. This is the FOMC minutes, comes out at 2 p.m. Unless there are any surprises in that, they're usually non-events, okay? Unless there's something in that no one, whatever, some piece of information that was in the meeting but everyone overlooked, whatever it is, that's more important for intraday type of stuff, especially if you're day trading. Otherwise, I wouldn't worry about it. And then look, what's this on Thursday? We have British inflation report hearings. Okay, no one cares. And then we have Chinese numbers coming out. What is this, on Friday? Or something like that. Or maybe even Saturday. I don't even know. But the 29th? Isn't that a Saturday? Anyway, so not a very busy week in terms of economic reports. Again, it's just important to just go over that. Even it may seem just kind of like, not very useful at times, but it's just good to know. All right, now let's get into Bitcoin first, all right, because I want to talk about the relationship. Now, first thing I want to talk about levels. Thing with Bitcoin, now I've been saying this over and over again. We've been fooling around this 18.5 area now for what, like a week? Hey, DJ, we started what, like a week ago, started to test the level. We've been fooling around in the level, fooling around. Now, people who don't understand this, or people that are focused on small time frames, are not going to recognize this price action. We are fooling around a pretty significant inflection point. Now, this point would have been insignificant if we cleared the level and just kept going, okay? But we didn't clear the level. We touched it, we sold off, we touched it, we tried to clear it, and then we went back below it, right? So we're fooling around. That means the level has some relevance. That means traders are reacting to the level, okay? Or participants are reacting to the level. That's important. That's important to know. So, because this level could have been a random level. It's a projection level, all right? And when the market confirms that the level is there, okay, now we need to pay attention to what occurs around the level. So yesterday, we had this interesting bearish candle, which you can argue now is a bullish pin bar. But bullish pin bars are not very attractive at highs, okay? You don't want to see these at highs. You want to see these at lows, especially if it's a higher low. So this is not a good place. This is good for day trade, not good for swing trades, okay? In fact, this is a bearish, this has bearish clues or whatever. It's a bearish pattern when it's located at a high. Now, that's followed by another doji. So, again, indecisive price action. Can this be a consolidation to break higher? It can. That's one possibility. But either way, we can't take any trades here as far as a swing trade goes. This type of price action, good if you're a day trader. You can use these levels like the 17.6 or what's today's low, 18 even. You can use those levels as reference points. But the thing is, where people go wrong with the day trades is they get in, it doesn't go their way, and they hold on. Okay, so you went from day trade risk, which could be a couple of 100 points, to swing trade risk, which would be a couple of 1,000 points. And that's usually what catches everyone, right? Everyone's doing well until you get caught in that move. The next big mistake is it pulls back and people buy too early. So we can't do anything here but wait for our levels. So we're waiting for the 16K area, maybe into the high 14s. That whole area is a possibility, but we have to see if the market delivers it. Otherwise, we're going to have to look for an adjustment, maybe higher, maybe in the mid to high 16s. Depends on the market. Now, the other thing I want to address here is the relationship, because we've been getting, I notice a lot of the same questions that we get, when it comes to the altcoins. So when you're looking at Bitcoin relative to altcoins, you have to think of it as Bitcoin is the S&P and the altcoins are like stocks, okay? There's a relationship between stocks and the S&P, and that relationship is basically one of relative strength. Many of you know it because you're in the chat room and I talk about it all the time. But if you're not familiar with it, when the S&P goes higher, your stock should be going higher. If the S&P is going higher and your stock is not pushing highs like it should be, that means your stock is weak. That means when the S&P has a real pullback, your stock is going to be the first one that everyone gets rid of. Okay? It's the same relationship with these altcoins to Bitcoin. Now, unless an altcoin has a particular piece of news that comes out, which is possible, but charts don't help us with news. So in order to benefit, to really benefit from those random news items that come out of nowhere, you have to be an insider. And since this space is not regulated, I'm sure many insiders know when the news is going to come out. They have plenty of time to buy into it. The news comes out and they sell it to you because you're the one that's reacting to the news, right? Or that's the typical herd mentality. So if you're not the insider, then, it's just, you're not really in a good position when it comes to these things. Now, I bring that up because let's just do some comparisons here to evaluate the relationship. Look at Litecoin, right? So Bitcoin was basically pushing highs. Litecoin performed, or at least, outperformed or whatever. It followed along. It did its job, right? This is what your altcoin should be doing when Bitcoin has a move from 14K to 18.5K, right? Your altcoin should be doing something like this. Can we buy Litecoin now? No, you should be distributing Litecoin now. Just like Bitcoin, you should be distributing. Someone had a question in our free chat room, and it was a good question about, how would you handle Bitcoin now in terms of trimming? Because he had mentioned that he had trimmed a bunch. He felt that he'd trimmed too much too early because he got out of a bunch of it at 13K or whatever, or something like that. And now we want to know, should just let it run? Well, look, never feel bad about trimming, for one, right? Because you're never going to get the perfect high or low. But when it comes to trimming, the question that you have to ask is your instrument performing with the parent? Like in this case, is the altcoin performing with Bitcoin? If not, okay, let's take a look at when it's not. All right, Tezos. It's beginning now. It's starting to. But this is way behind, okay? So this would be an example of this is not performing. Because look where it is. Okay, it's starting to push this resistance while Bitcoin is at, almost 20K, right? Tezos should be, relatively speaking, Tezos should be up here. It's not even close. So would you say, and now let me ask you, based on what I just said, would you say that this coin is outperforming or would you say it's underperforming? How would you characterize this? How would you, you could share it in the chat. I know I have to wait a few seconds for that, but go ahead, you let me know. Is Tezos outperforming or is it underperforming Bitcoin? And once I see your answers, I will continue on this example. Now, another one that we could take a look at, Neo against the dollar, right? This one is another one, a Ethereum wannabe or whatever. Again, trying to push this resistance. Nice laggard moves, okay, great. But again, Bitcoin is, relatively speaking, up here or higher, relatively speaking. Why is this coin struggling, right? So that's good, Kev, good answer. Right, so back to Tezos. Now that it's trying to pop, right, it's going to get people excited. But now if you know that this thing is underperforming or relatively weak, do you think you should be buying more here? Or do you think this is an opportunity to get out of some, if you have some from bad prices, this is your chance to distribute, right? This is your chance to get out and rotate, would you say? So it's relatively weak, right? So the point is this. Some people who don't know any better are going to be like, oh, it's lagging. Soon, Tezos is going to be up to here. It's going to be up to $4. So I'm going to buy, 10,000 coins right now. That's a mistake. You should be, first of all, if you're not in it, you shouldn't be getting involved in it. Second of all, if you are in it, and maybe you're in from a bad price, this is your chance to reduce your risk, is what this is. Okay, so look, maybe Tezos will work its way to this next resistance. While this lagging effect, or I like to say rotation of froth, as I described it in the chat room earlier. While you have this opportunity, this is a chance to distribute. Now, this is something that we have done from, April of 2018 till now. Well, we had a bunch of altcoins in our portfolio, and we trimmed out of them when we had these opportunities. And we took that money and we put it into Bitcoin. That wasn't a secret. It was in all of our, you can look back at the emails we sent out at those times and all the things that we were doing. It's part of our track record. And that is what we have done. So we put it into the winner and we rotated out of these lack of performance. Remember, altcoins are not stocks. There's no regulation. and a lot of them are based on empty promises. So they're just basically gambling. It's like a lottery ticket, right? It's like a gambling thing. You can hope they work out, and some will work out for whatever reason, but most of them won't. So that's what you have to keep in mind. This is not a leader, okay? A leader looks like this, or a coin with merit looks like that, okay? That's what a coin with merit looks like. It's pushing highs like it should be. XMR is another one, right? How's this one doing? All right, it's not doing as great, but the thing is, it's at a decent level, right? I don't see this thing messing around its lows, right? I don't see this thing messing around over here, is it? And trying to come back. It's in a consolidation trying to break out. Okay, that's a decent coin. That's a coin that has capital flowing into it, right? That's what the structure tells us. So that's the point that I want you to take away from this, that there is this relationship. So when you're making a decision with your altcoins, compare it to Bitcoin, and that will help you decide much better on what to do. Okay, you're not going to miss out on the next Bitcoin, because if that was the case, all the money would be flowing into whatever the smart money thinks or knows the next Bitcoin is. There's only one Bitcoin, and it's Bitcoin. All right, so just something to keep in mind. Ethereum and Litecoin, hey, they're cool. They're seeing they're doing what they should be doing. Okay, fine. But even those, again, there's nothing wrong with trimming at highs. Okay, there's nothing wrong with reducing your inventory, because you will have a chance to buy it back at lower prices. This thing is not going to 300,000 tomorrow like everyone likes to think it is. All right, as we saw, just to bring up an example, back in December of 2017, everyone was saying 2018, you're going to see a $40,000 Bitcoin. You're going to see a $30,000 Bitcoin. Bitcoin went to $3,000 after December of 2017. Okay, with all this, there's no coins available. There's only going to be however this many coins, and it's limited supply, and the whole world is going to buy it, and all this other nonsense. And Bitcoin went to 3,000. Okay, so just to give you an idea, there will be opportunities to buy back your inventory. As long as you have some, don't worry, right? You're still winning. The market's going higher. You're still winning. You trim out, you lock in profits, you reduce risk. When the market gets hammered and it's hated because it's part of the cycle, then you'll have an opportunity to buy back those coins that you sold out or whatever at better prices, okay, and average into your inventory again. So that's all you have to wait for. It may take some time, but that's the game that we play, and that's what our long-term strategy is based on. Now, there's some more fundamentals involved in that sort of thing when you're talking long-term, yearly type of trades, but we still use technicals in a broad sense, even to make some judgments. Like, we know when prices are hated, and that's when you'll see Andrew puts out those inventory trades. Back when Bitcoin was pushing 6,000, 5,000, whatever, we were buying. Okay, back in March and April and whatever, we were buying. You have to have the courage to do it, but we were buying. All right. Anyway, so let's move on. Before I rant about this for an entire hour, I want to answer your questions. Okay, so two other markets I want to look at real quick is I want to look at the S&P, and I want to look at the euro. Okay, so let's start with the S&P here. So like I said, holiday week, right? And the S&P has been in a very tough area. So let me explain. Many of you know this. This is a resistance zone, and this is an area where we should be seeing selling activity. Okay, and it started out that way, but it's not following through. Okay, and we have this candle today, which is a decent candle, right? It's going to close very soon. That looks like a higher low developing there. If we close like this, we take out tomorrow's high, we will have a higher low established, and it could be going for the higher high. Now, does that make sense in a holiday week? Yeah, especially as volume starts to shrink. So that's why I say it's a vulnerable area. You have to be careful. Now, there's going to be some stocks doing spectacular things, like Jumia, which we'll talk about here in a minute. But you can't go nuts with these things, okay? Because they're gonna catch. What they're gonna do is they're gonna go to a high. They're gonna suck a lot of people in, and when they pull back, you get caught, right? And many of them will pull back. Now, we have to see how this holiday rally goes and how news unfolds in this period. Remember, we're in an unusual period for the Santa rally. Okay, usually during these times, there's no major geopolitical problems and the market has nothing really to hold it back. But this time, there's some more uncertainty going on right now. So we have to see how that plays out. All I can tell you is that we're in a unattractive area. If the S&P instead was fooling around here, I mean, that's the middle of the range. I'm not a big fan of that, but I'd rather see that than here. Or if we were fooling around here, like we were before the election, which was back here, that would make a lot more sense based on where we are, with the holiday cycle. So we have to see if we get these opportunities. And if we do, that's when we need to be paying attention. That is when we need to be looking for those swing trades and position trades in the stocks that we've been, tracking now. Trade ideas are not a reaction, as those of you that are in the chat room know. Trade ideas are a plan that comes together, and that plan begins with tracking. Right? We track stocks. Sometimes it takes a month or two for the trade to line up. I mean, our original Jamia trade, or the original Nicola trade, and the workhorse trade that we had a while back, those took weeks for one to line up. And then once we got into the position, they took weeks to deliver their positive outcome. Weeks. Workhorse took 2 months for us to realize our 3 targets on that thing. So just keep that in mind. Now, so that's the S&P. The Nasdaq's going to be in a similar situation. Let me jump to the euro real quick, okay? Because this is where, this is weird. Okay, see that? We started out pretty strong, earlier today. I guess going in from the euro opening hours, and we sold off. I guess that news, whatever that news was, euro didn't like it. Okay, and the dollar strengthened. Well, I shouldn't be too surprised. We're at a resistance area here, which has been pretty tough for this thing to break. So this is why, you have to wait for levels. Buying the euro in this area is not a good idea, right? And because this is what you're facing. Everything looked fine, and then some news comes out, and the wind gets knocked out of it. Now, is this a short? We had a short on the pound, which got stopped out, and it's tough. This is a tough. There's really. This is a very wide candle. If you were to short something like this, you're looking at, what is that? About over 100 pips of risk, because your stop would have to be up here somewhere, and it would have to take out this low to even get into the trade, something like that. What is that low there? 18 even. So again, it's tough, and you're better off in these situations. Just let this thing figure itself out, and wait for a more opportune situation. And that would be, for me, I'd want to see a test of support. I wouldn't mind looking for longs in those high 16s if it can give us something that's a range low in a bullish trend, right? That has a much higher probability than shorting a range high in a bullish trend. You see the difference? You could try shorting this, but again, like we saw with the pound, it's not going to be an easy short. This is not a bearish trend. There may be something worthwhile in there, but you really have to stay on top of it. Whereas if you're buying a support in a broad bullish trend, that's much more in your favor in terms of probability. Okay, so just wanted to point that out. All right, so that's enough of that. Let's get into what you guys want to see. You guys and girls. All right, so before I get into the chat here, I just want to say one thing. If you're new to the channel, please make sure you subscribe to the channel. Press the subscribe button, and also press the like button if you like the videos that I do here. It's very encouraging. I like to see that. Also, check out greenbridgeinvesting.com. We do have a swing trade signal service by text, by email. We also have portfolio management ideas by email. As many can tell you here, we have a nice track record that we've developed now for over 2 years. And we also have a chat room where we share our insight and updates to many of our ideas throughout the day. Now, we have a 7-day free trial. I encourage you to check that out. We're going to run this. The way we have our prices right now are going to be good for a very short time longer, very short time, probably after this holiday week. And then we're going to raise our prices. So if you like our low prices now, this is your opportunity to lock those in. We're not going to raise them on our members, okay? Only on new people once they're locked in, once we change the prices. Okay, so let's get into the chat here. Say hello to everyone. All right, hi. I said hi, Christian, J, DJ, SE, HS, nice to see you. Kev, okay. So let's get into Scott. Have a 25% Jamia. Scott has a 25% Jamia position bought back at $7. Nice. Where should I close out this position? Okay, good question. Let's take a look at Jamia. Jamia has just been in ridiculous mode. Okay, as you can see, we had our buy stop, right? This is a while back, this trade, at 850. And we got out at 1350. And man, look at this. That's nuts. Okay, this thing is at 30, the high of 31.16. It's basically at 30 and a half right now. Excuse me. So Scott, to answer your question, when you see a move like this, it's vertical. There's no reason to close this thing right now, technically. There's no sell signal, right? There's no pin bar. There's no bearish pin bar. There's nothing. You don't even have a bearish. You don't have an inside bar. You don't have a tail. This tail doesn't mean anything up here. So the way when you have a winner like this, just the best thing to do is let your winner run. So like I've said this before, there's two things you can do. You can wait for a sell signal, right? What does a sell signal look like? Well, something like this, okay? Some kind of bearish candle, right? Now, if you wait for something like this, it means you're not going to get the top. And if you get a very sharp bearish candle, you may give back a nice portion of your profit there. So you have to be okay with that. That's one thing. But at the same time, waiting for something like that may allow you to collect more profit than you would have to begin with, because you may not get a sharp candle. You may get a tiny candle. You may get something small, right? But you are not going to get the top. You're not going to get the top of that. The bear candle needs to develop and close and take out the low. Okay, that's one thing you can do. So you let it run until you get that. Or you put a stop, a trailing stop. You manually trail the stop. You could go maybe 2 candles behind. Okay, so like in that case, your stop would be at 22.12. Okay, I mean, that sucks giving back, almost $10 there if you get stopped out. But at the same time, that may allow you to ride this thing. What if this thing runs to $35 or $40, right? So, and you keep raising that stop. So it will allow you to capture more of the profit, and either you let that thing go to the trailing stop, or at some point you just say, you know what, I think I've had enough, I'm just going to get out. Okay, now you said that you have 25%. So another thing you can do in a situation like that is, remember, you don't have to sell all 25% at one price. You could say, okay, I'm going to sell half of my 25%. So let's just say that happens to be 25 shares. So you sell 12 shares. Okay, you sell 12 shares when you see your sell signal, and you hold on to 12 shares. Why not? I mean, you're not going to make a ton of money on that, but hey, you're still in it if it wants to run further. If not, you have your stop or whatever, like I said, and you can experiment with those techniques. But at this moment, there's no reason to get out of this thing. If you've locked in profit and you're just riding a winner, let it ride. Okay. If you had not locked in profit, Scott, I would say definitely lock something in now, and I would have said that back here too. Definitely lock something in, because whenever I see something vertical, it's a good habit to be in. Lock something in. You've done that. So at this point, you let your winner ride. Okay. So good question there. DJ, sell all the crap coins. It's mostly right. That's exactly right, DJ. Most of those coins have nothing to offer. Okay, like I always say, cannabis stocks have more to offer than many of those coins. But there's going to be a lot of hype out there. There's going to be a lot of people pushing them because, there's another agenda. They have an agenda to push those coins, whatever it is. Don't get sucked into that. Okay, Scott, let me see Scott's other question here. How do you designate long-term portfolio holdings versus swing trades? Should I keep that 25% a buy and hold considering how strong Jamia has been? Well, you have to stick to your plan. Now, the thing is, if you started out as a swing trade, you should probably keep it as a swing trade. You really shouldn't mix. But there are occasions when you have such a big winner, you say, you know what, I want to hold the core position, right? So you could do that. As long as you have a winner and you're doing it with a winner, there's nothing wrong with that, right? Like I said, you can unload maybe one more portion, half of your 25%, and then hold on to those 12 shares. Let's just say you started out with 25 shares you have right now. You close half, right, on a sell signal. Now you have 12 shares. You say, okay, that's going to be a core position, right? So you own 12 shares from, the $7 area. Now that's it. Now you're going to hold on to that because you like what the stock does and you want to hold on for a number of years. But that's a decision that you have to make based on what you know of the company and if you believe in their potential. That's where fundamentals play a role. As you know, and sometimes people criticize me for this, I'm very short-term oriented, right? I'm only interested in swing trades. My videos here are very oriented around swing trades. I don't talk much about investing, but because that's my style. Um, some people seem to think that I'm against fundamentals. I'm not against them. They have their purpose, but for swing trades, they don't really mean much, right? So if you like Jumia over the long term, then once you make that decision, then you say, okay, here's my plan. I'm just going to hold on to this 12 shares, and on pullbacks, I'm just going to buy more, right? On a deep pullback, you're going to add, another 12 shares. So that's going to be your long-term position. It's nice if you could separate them into different accounts. Not everyone can do that, but if you can have one account for long-term and one account for short-term trades, that's also very helpful. Um, so, so again, to answer your question, the designation begins with the long-term outlook, and that's where we look at fundamentals. Like for a stock, does a stock pay dividends? Is the stock have a lot of potential for the future? Like, is it an electric vehicle stock? Why should this stock be good in a couple of years? Is it GE? Is it renewable energy? Is it, or is it some speculative stock that everyone's just piling into right now because Kramer's talking about it? Right, so you have to be able to answer those long-term questions. That's where Andrew comes up with those portfolio ideas. He doesn't just pick a stock because it's hot right now. Okay, so Jumia, I know they had their earnings recently, and they had some decent numbers actually, but their initial report wasn't that great, but their underlying numbers weren't bad. So that's what this pullback was over here. Now the thing is, why is Jumia doing this? Maybe it has something to do with the holiday season. We are in holiday season. Jumia is what the African version of Amazon or whatever. So it's an online retailer, right? They sell stuff online, so that may have something to do with it. So anyway, those are the things you have to weigh. Those are the factors you have to weigh. I hope I answered your question there. Okay, HS, what do you think if XRP moves? Where do you think it could reverse? Okay, good question. So XRP. Now this one's been interesting, right? And it's doing its job as far as performing. It's at least performing with Bitcoin, right? Bitcoin's on highs. This thing is starting to do something spectacular. Okay, this is what it should be doing. Now, just looking back here, though, at previous levels, where is this thing? We go back a year. How is this thing performing relative to where it was over a year ago? Okay, so it's starting to take out some pretty significant resistances, okay? Those are all good signs, and it's performing in line with the Bitcoin rally. That's all good. Now, that doesn't mean we want to buy it here. It just means that we could be open to a pullback if this is going to be a quality coin, or if they have some merit or whatever, or if capital is flowing into this, which is basically what this could be the start of. I mean, look, just going back, right? This was the March low back here. And it's sort of this pattern that you can see here is very similar to the pattern that Bitcoin had. Okay. And now it's starting to play catch up. Okay, fine. So that's the first thing. It's showing signs of structural strength, and it's starting to take out some important resistances. Now, the next question is, where do you think it can turn? Well, this is the 50-cent area is one possible area, but I would not short this thing. Like these things are bad ideas for shorts. Imagine if you had shorted this one earlier. Like again, it comes out of nowhere. These are very sensitive to news, and there's no regulation on these. That's why it's so important not to short them. That's why we don't short Bitcoin. We don't short Ethereum. We don't short them. Have there been shorting opportunities? Yes. People criticize us too, and many people on TradingView, oh, why don't you short Bitcoin? A million times that people ask me that question. It's because the risk is too high. Okay, and we're not talking about just risk determined on a chart. There's no regulation. So, some news can come out of nowhere, and next thing you know, this thing is, at $5, and then you're caught in that short out of nowhere. The chart's not going to help you with that. So that's why. So just going back here, right, I want to look back, and I want to see, some major levels going back. The only levels I see here, let's close up this chart a bit, okay? When it starts to move like it's moving now, I'm interested in where it is relative to dramatic levels historically, right? So look, let's go back. How, man, we're going back now to 2018, right? 2018 high is at the beginning of the chart there. And we're just now starting to take out resistances. So, okay, maybe this thing is showing that, it wants to be in play again. And I would be looking at these peaks, right? These previous peaks. Now, I would say, you can go back a couple of years. The price action itself is not going to be very meaningful, but the levels will be, all right? Because those levels have memories. People are stuck at those levels. People bought at those levels, and they're happy to get out. That's a very common thing. So those are the levels you're looking at based on, where this thing was in 2018. So you're looking at 75 cents. You're looking at basically $1, and you're looking at $1.20. Those are all inflection points where this thing may find resistance and potentially turn, okay? But again, Bitcoin and all that will have to also pull back. Remember, these things are not on their own. This may look like it's on its own right now because, Bitcoin's not really going anywhere, and this thing is starting to look a little more spectacular, but it's playing the follow-up, the catch-up game, right? Just like Litecoin and Ethereum, they played the catch-up game. And XRP is like, it's always been up there on the list of better coins, although it's been slow to do anything. Really, in my opinion, this is just a chance to get out of it. Unload, get out of it while you can, and put it into something that's more proven, like Bitcoin. But anyway, to answer your question, those would be the inflection points, and I wouldn't expect this thing to pull back until Bitcoin pulls back first. All right, when Bitcoin has that 2,000 or 3,000 point pullback, I'd be curious to see where this thing goes. Okay, so and if it pulls back, you're looking at that. We had a resistance at that 30-cent area. What is it? Low 30-cent area, 33 cents. That's your support right now. Okay, so people that are all getting excited about this at 50 cents. I hope they're prepared to take pain if this thing goes to 30 cents, because that's where your support is. All right. If you're going to buy this thing, if you were to buy more, that would be the place to do it. Not here. Okay. And I wouldn't short it looking for a move like that either. Too risky. Okay. So I hope that answers your question. Good question. Jay, please take another look at PayPal. Sure. PYPL. So PayPal. Now PayPal tends to follow the market. Okay. It's a market stock. And PayPal has been in this consolidation for some time here. So let's look at the levels. All right, so we have a range low there. We have a range high right about there. Okay, and when you're dealing with these things, your nice move today, right? Nice bullish movement going on there. Perhaps, could be for many reasons. I don't know why. But the thing is, we're going into a range high area. Now, the general trend on this thing is clearly bullish, right? There's nothing bearish about this. And it's going for that range high. These consolidations are typically trend continuation patterns. I would suspect that this thing is going to try to break out. So, what do you do in those situations? Well, this is not the best price to get it right now. If you're looking for a higher probability price, it would be near the range low, maybe 174s, maybe the low 180s, something like that. If it provides that opportunity, that would be a place to consider it. Now, keep in mind, if that S&P pulls back, you may break that range low, okay? Because again, this thing follows the market. At some point, if the market has the pullback, this thing needs to maintain that range low. So if the market continues higher, I would suspect this thing is going to go for the breakout. So what do you do in this situation? Well, one thing to do is you can take a small bite. We talk about this a lot too. Take a small bite at whatever price, say today's price at $200. Okay, you take a small bite and you add more on the breakout if it can clear. If it doesn't clear, well, you have some from, you're going to have to hold some through the noise. All right, imagine if you tried doing that, back here somewhere, and this thing went to like, what is that, 208, and you bought more thinking it was going to break out, and the thing went right to 174. Can you handle that pain? Well, if you're sized appropriately, it makes that type of pain a lot more plausible. So that's what you have to keep in mind. This is the risk you're facing, okay? And if it breaks that support, now you're going to have to face a loss, because otherwise, if it has a much broader pullback, you get caught in that, and you don't want to get caught in those. So at some point, you have to take that loss. So that's something to keep in mind. I typically don't like buying stocks like in this situation. I'd rather wait for a pullback. I'd rather wait for a pullback followed by some kind of bullish reversal. At least I know I have a much better price, I have much better potential, and lower risk in those situations. Okay, but is this thing generally strong? Yes. Is this thing likely to break out of this consolidation at some point, especially with a supportive market? Yes, because it's a continuation pattern to go long. So those are that's the potential. You need to clear the 212 area, but you're facing risk of this thing testing 174. Okay, so thanks for bringing that one up. It's a good stock. Okay, so DJ has a question here. I have been taking profits way too early too. I need your help. Okay, I sold my workhorse option and price went up almost $150. Okay, I still made good money, but I sold it too early. I've been thinking about buying puts again on Jumia. Okay, well, I think it's a little early to buy puts on Jumia. But let's take a look at Workhorse. Okay, since you bring that up, look at this. Workhorse is another one. Amazing, right? We had a trade on this, a month ago, where we sold a put, okay, at $26. We took in a $3 premium, whatever. It went against us, okay? It went against us, and we held on. We got assigned the shares. So our cost basis was $23. This thing went to $15 on us, and now look, it's at $28.60. We held on to this. We never banged it out, okay? So we believed in it. We believed in the potential. Here's the thing, DJ. In these situations, when you're dealing with options, it's tough. You're never going to get these, you're never going to realize like these amazing moves. It's going to be very hard because remember, when you're long options, you're always fighting time, okay? Time is always against you. So maybe, I don't know what options you had exactly, but your options, if they were out of the money options, a move like this is obviously going to have a delta that's probably lower than 50 or lower than 50 cents, which means for every dollar this thing moves, you're only going to be making about 30 or 40 cents anyway, right? Typically. So if this thing peaks and, and you're still in it, so this thing may have run, let's say the Workhorse ran $20, okay? And you're only making about $10 of that, okay? Anyway, so my answer to you is don't worry about top ticking these things. Get out while you have a profit when you're dealing with options. Now, if you have the stock, okay, and you have shares of stock instead, well, in these situations, you just don't sell when you see them going vertical like this. You just don't sell, and then you sell some, right? Like for something like Workhorse, for example, when it started to go vertical, you know how I always say, lock something in. So that's just a good habit to be in, no matter what. It doesn't matter what price. If it's vertical, lock in. You have 100 shares, sell 25 shares. Just do it. It's a good behavior. Now, once you've done that, now you're a stronger hand. You've reduced risk. And now you see where this thing goes. If it pulls back on you, you have a chance to buy back into those 25 shares, right, at a lower price and average back into your position. But if it doesn't pull back and you have this type of move, well, now you're still in. So to answer your question as far as where do you get out in these situations, there's two things you're waiting for. You're waiting for a sell signal. Do you see a sell signal in Workhorse right now? I don't. So you don't get out, okay? At some point, one will appear. But you have to be prepared to get out when it appears, right? Like back here, look at this. This was a sell signal, pin bar, bearish pin bar. What now? Let's just consider this situation here, okay? Back in October. So let's say you held it to that 30 and a half high, and then it closes the day at 26.56. You'd be like, oh, I could have had $30. I'm gonna hold on because tomorrow it'll probably go back up, and it went straight to 15 off of that move. Okay, so that's why when you get the sell signal, you're not going to get the top. You have to get out at that point. Sometimes you're going to get faked out. That's normal. But so you can wait for the sell signal, see how far it goes, wait for the sell signal, or trail the stop. Okay, trailing the stop is going to give you the same situation, and it's going to fake you out at times as well. There's no perfect process for this. But if you're trailing the stop, if you're trailing it 2 candles behind, okay, 26 and a quarter. Right, and this thing. So if this thing pulls back, another what is it? 28.74. So if this thing pulls back $2.50, right, you're knocked out, right? And then tomorrow, if it goes higher, you put your stop here. 26, what is this low here? Sorry, today's low, 26.24. All right, what was yesterday's low? Oh, I'm sorry, 23.21. I'm sorry, right? That's where your stop would be today. Tomorrow, this thing pushes higher, your stop goes to 26.24, right? At some point, you're going to get knocked out and you're going to give something back. Again, that's more appropriate for shares, not options. Because options, you're dealing with a lot more stuff working against you. Like in this situation, if I had options, I'd just get out. Just get out. You know, take the money off the table. Because when it turns, you're never going to get that maximum option premium again because the time is working against you anyway. All right, so I hope that answers your question. Okay. So DJ had the $30 April 21 workhorse. You bought it at $325. So, okay, so it was out of the money. You bought it at $325, and so it's still out of the money. So I would imagine, so your delta is definitely not going to be, it's not going to be near 99 cents or whatever, right? It's probably going to be around here. It's going to be probably around 50 cents anyway, right? So for every dollar it goes up, you're only getting paid 50 cents anyway. So it's not like you're missing out on a huge amount here. And when this thing turns, you know, it's like now you're caught in it, plus time value is still working against you. So you had April. That's a pretty decent amount of time. So don't worry about it. Like I said, what price? Where did you exit the workhorse? Where did you get out of that option? I'm just curious. What price was workhorse when you got out? And I said, Carlos, can you take a look at Nikola? Sure. So Nikola's another one, NKLA. Remember, Workhorse, Nikola, look at all these. They're all starting to do their thing. We were in these weeks ago. Okay, we were talking about these weeks and weeks ago. Remember Workhorse? Remember I was talking about, I've gone over this so many times, how it was lousy, but it wasn't really selling. It wasn't selling off, right? The market had some selling activity during this situation, and now look, wow, Nikola's magical. No, we saw the nonsense, okay? And we were tracking this thing way back here. Anyway, so can we take a look at Nikola? Well, yeah, so Nikola's doing its job, right? This is what it should be doing. Has this little continuation pattern over here. I like to see that. Two little bearish candles followed by this. Okay, great. Coming off of a higher low. It's taken out resistances. Okay, look, took out like these resistances here. It's showing strength. No reason to sell this thing. Okay, you're getting near that $30, what is that? 30.5 area. That's a resistance. It's an old support, new resistance, but there's no sell signal. There's no reason to sell this thing right now. So if you're in it, let it run. If you're not in it, you can't chase it now. Okay, because remember, the prices, the opportune prices were back here in these the low 20 area. That was the place to get involved. Now the party's over. Getting involved in these things now is like buying cannabis stocks, you know, in October or November of 2018. They never went higher. So I wouldn't get, you know, too caught up in this. If you're not in it, leave it alone and wait for a significant pullback. And that can take weeks. It may have to go up a few, you know, this thing may run another 5 or 10 points or whatever before that pullback occurs. But it's not worth taking the risk. Okay, so I would just leave it alone unless you're in it. Now, if you're in it, like I said, you let it run, and you have if a sell signal develops around that $30 area, sure, take some off the table. Okay, but let this thing run. This thing has potential to reach those 40s. It's possible. It's possible. You know, I don't know if it'll get there, but that would be another place to consider locking some in if you can hold it that long. All right, if it doesn't have a shakeout pullback first. If it does have a more dramatic pullback first, that may be an opportunity to get back in. Okay, so that's what I would do with Nikola. Again, don't get sucked into all the hype and all the excitement around these. This is what you need to be in these before these type of moves. Okay, so thanks for bringing that one up. That's been on our radar for a while. Okay, so now the $30 workhorse is 7 something. Okay. You sold it around 4.5. Okay, so you left a couple of $100 on the table. All right, no big deal. Again, you'll have more opportunities, but again, use those candles. Use the candles to really guide you. If there's no sell signal and you really think the thing has a lot more potential, hold on until you have a sell signal, at least. Just keep in mind, you're never going to get the top. Okay? At least it was profitable. And I understand, trust me, I've been in that situation many times. So I understand the feeling, believe me. What about Nicola options? I have a $30 call, April 21st. See, now you have a lot of time. You have a lot of time on the $30 call, and look, you're just getting to that strike price now, right? No reason to get out of that. Just hold on, right? Just hold on. Let this thing do its job. Let this thing make you some money, right? All you have to do is sit back and let it ride. This would be much more of a concern. Like if you told me, DJ, that you had the January call on Nicola, I'd say, all right, well, that's actually coming up pretty quick. And the reason why that you say coming quick, that's in a couple of months. But the closer you get to your option month, the faster theta decays. All right. So that's why front month options are the worst. Never buy front month options because the theta decay is the fastest, and it's very hard to make money with those. So you still have plenty of time. All right. So let this thing do its job. Let this thing run. If you only had 2 months out or 1 month out, I would say you should probably lock it in sooner than not. As soon as it gives you a hard time, get out, because again, you're competing with time value, which, if you had the shares outright, it's a different story. Okay. It's very important to understand that distinction. When theta is working against you, you have to be quicker to get out of these things. You're going to leave money on the table, but hey, you know what? That's the trade-off that you have to accept when you bought the option. Because remember, options have their own advantages, but they're not perfect, right? If you own calls on Nicola, well, your risk was limited to the premium, number one. And number two, you didn't have to tie up as much money, right? 100 shares of Nicola at $20, you're tying up, what, $2,000 per whatever, right? Per 100 shares. But with an option, you're only tying up a couple $100 to control the same 100 shares. You have to pay for that trade-off. Okay, so it's going to come in the form of you're never going to maximize that value. So don't beat yourself up over that. Okay, if you're coming out green on long options, that's you have a lot working against you. So that's a good thing if you're coming out green. Okay, so DJ on SPY Weekly taught me that. Okay, and you have shares too. So if you have shares, again, great, because now you're going to realize the profit 1-to-1. Okay, so great. You just sit on that thing and you let it do its job until you get a sell signal. Keep in mind, a sell signal can look like this bearish situation back here, okay, where it gives back a pretty big portion quickly. You have to be prepared for that. And if it does it, you have to be prepared to get out, right? Otherwise, you risk giving back a lot more. So that's the thing you have to keep in mind with those. Okay, so trust me, I understand it sucks when you watch something like Jamia run up and you could have made it double, even more, more than double your profit and all that stuff. It's frustrating, but if you're crying about profit, that's a good problem to have. Okay, that's a good problem to have, and don't worry about it. You'll have other winners, and as you get more experience, I mean, look, I have a lot of experience, and I still make that mistake sometimes. Okay, so it's just something you have to deal with, and as you get better at it, you'll give some of these things more of a chance. Okay, so good questions, good questions. Do I have any other questions? I think I got to everyone's questions in the chat so far, and thank you for asking them. While you're coming up with some more questions here, let's take a look at Groupon, right? Look at this one. This is a swing trade I sent out a couple of weeks ago, right? This thing reached its first target. Look at this. Are we at the target 2 yet? Let's see. Today's high is 29.95. Target 2 is at 31.50. Nice. Okay, so locked out 1, got out of 1, reduced our risk, looking for target 2. And this was another one. It came out of nowhere. No one was talking about Groupon a few weeks ago, but we were, right? Because I spotted the pattern. I spotted the levels. I liked the price action there. And we sent this out. Okay. Oh, DJ, I'm afraid to even look at Roku. Let's see. Let's see Roku. Oh man, yeah. Roku is a mover. This one was Roku's tough. It's a tough stock because when you're wrong and you have to take pain, it's very painful. Okay, but when you're right, man, this thing is amazing. But you can't touch this thing now. Look at that. You can't touch that. That's what a move, you know. But even during these consolidations, Roku is a tough stock. I mean, I remember when we were involved in this thing back at like what, 90? Remember 90? And we sold it at like 120 or whatever it was. And this thing is now pushing 276. That's nuts. What are we going to do? So all you can do with stuff like this is, like, if it catches your attention now, put it on your radar, okay? And at some point, it'll provide a high quality opportunity. And when it does, you have to be prepared. But right now, this is not a high quality opportunity. This is an opportunity for those that took the risk to distribute and get out and distribute their risk to people who are reactive and who are chasing, okay? You should have called it as a position trade instead of a swing trade a few months back. Yeah, I know, DJ, but you know, again, something like Roku, we probably would not call that. I mean, at least I wouldn't. Maybe Andrew would, but I wouldn't, because I don't think they pay a dividend, for one, right? We want to, if we're going to hold on to something, and if there's any kind of pain that's going to be involved, at least want to be collecting something during that time. I mean, not all of the stocks that he calls for portfolio are dividend paying stocks, but yeah, this is just tough stock. You know, we had a hard time in this trade. Yeah, right. And I remember DJ, this stock, when we were in this, it wasn't easy, right? We took the trade at, I think we took the trade at like 98 or something like that. It pulled back on us, almost stopped out, and then it went to its targets or whatever. And then it gave us a hard time. We got out early, right? Because it went to like 130. Our third target was at 135. Gave us a sell signal. We got out of the whole thing at like 122, and we thought we were cool. And here we are at 267, okay, or 276. So, you know, what are you going to do? The stock, you know, the stock market's had a pretty amazing move since that time, and that was a while ago. That Roku trade was back, I think, in, what was that, May? Was it May? I think that was back in May. Let's see. What's the price of Roku back in May? Yeah, that was back in April and May. That's when we were. This is when we were involved in Roku back here, and it would never really pull back to a price that we could be satisfied with. It just kept going higher and higher and higher and higher and higher, and now it's there. So again, look, you're not going to catch them all, but the good news is there will always be more opportunities. Okay, we just have to stick to our plan. We have to follow our strategy. That's the best we can do. And our strategy will guide us the right way when we catch opportunities. I mean, look, we can argue about CGC, right? Look at this piece of garbage stock. This one, right, 2 years ago was pushing $38 or pushed $50, and it went straight to $7. All right? It went from $50 to $7. The March low was like $7 on this stupid thing. And now here we are back at, you know, trying to push 24 again. So keep in mind, they don't always work out like Roku. Okay? Now this thing is starting to go. Okay, great. I wouldn't touch this stock after that move. I wouldn't. I don't trust these stocks at all. I don't like them. Especially with all the stuff that goes on with these stocks. So there are better stocks out there. If you're looking for high potential stocks that you can have big moves, there's plenty of really cheap stocks out there that are starting out at like $5 and they're going to like $15. That's still going on. It's just a matter of finding them, okay, and then getting into them at the right time. If it started at $5 and it's pushing $10, probably not a good time to be buying it, okay, and yeah. So it's all right. Remember that when you were looking to short it, right? That's why you don't want to short strong stocks. So there's plenty of examples of this. I mean, you know, Roku was one. I mean, look at Square. Look at Square. This is another one. We were fooling around with this one around $80 too, and this thing is now pushing 207. I mean, you can't buy these. You just can't buy these at these prices because they all look great now, and then by the time you buy them, what, maybe it runs another 5 or 10 points or something, and then what? Then the market has a broader pullback, and now you're caught from really bad prices. When stocks are doing stuff like this, you know, a $200 stock, whatever, okay, put them on your radar. this is a time to put them on your radar. And this is a time to then wait, note the levels and say, oh, wow, if this thing can pull back to, 150 or whatever, or something like that's an opportunity. So now you'll be able to recognize opportunities, potential opportunities in advance. Will Square deliver such an opportunity? Who knows? It might. And when it does, you have to be prepared to step in. You think it's going to look pretty if it tests 150 again? No, it's going to look horrible. Okay? And most people, you're going to be reading news, maybe they missed earnings. Everyone's going to come out, Square's going to zero. They're going out of business. The CEO quit. Well, no, I'm not going to touch Square now. Forget it. It's a garbage company. Meanwhile, that's the opportunity. Okay? So you have to be prepared. Look at MPC. Okay? Remember this? Marathon Petroleum? How many times did Andrew talk about Marathon Petroleum? About 1 million times. Always talk, oh, Marathon Petroleum, Marathon Petroleum. He was talking about that thing when it was doing this. He was talking about that thing when it was pulling back, here again. Like, he was talking about that thing the whole time. And now look, right? Marathon Petroleum at $41. That was a long term. That was a portfolio hold, Marathon Petroleum. That was never a swing trade. And this one was it paid nice dividends or whatever. There was a lot of reasons to buy this thing, okay? And he stuck with it, right? And that's now it's starting to perform. That's how you get into these winners, right? For the bigger picture. So you have to be prepared. He was not afraid to step in at those lousy prices. And did he take pain? Yeah. Did he buy the bottom? No, definitely didn't buy the bottom. But he built into a position, right? And now once it starts doing its thing, now it's easy to hold on to, right? Because now it's doing its thing. Look at this. This is probably going to break out higher low, probably going to get a higher high out of that, and it's on its way. Great. Looking to, in these situations, now you have the flexibility. It starts to push some ridiculous prices, you sell into it, lock in some profits. Nothing wrong with that. Okay, right, DJ. On the Talking Market show, he talk about it like every show. Marathon Petroleum. It's like, oh, enough of Marathon Petroleum. Well, it's a big winner. Look at Valero. This is a more recent one that he called. But the whole sector changed. You understand? That's the thing. The sector changed. But for a while, as you can see, for months, going back to, let's see, it peaked in what, June? There was a peak in June, and then it bottomed in November. Okay? So if you started chasing that thing in June, all right, and you sat there, you started buying some pullbacks in July and August or whatever, you had to wait till November for it to start to bottom. That sucks. That's a long time of watching your investment just go lower and lower and lower and lower and lower, and now it starts to go. Okay? So that's the patience you have to have with some of this stuff. And that's also important for long term. You have to be willing to have the patience to sit through that on long term. That's not a swing trade. All right? That's a position trade. If you notice, on our position trades, we manage our risk through sizing. We don't use stops. And it's for this reason, right? And that's why we always, when we're doing that on the portfolio side, we're always trying to pick stocks that have merit, that have good fundamentals behind them, even though right now there may be some problems with them, right? But generally they're good companies. Those are companies you want to get when people are not buying them or people are selling those stocks irrationally, right? Those are buying opportunities, but you have to be prepared to sit with them. That's what portfolio idea is, and average into them. Okay, and then over time, eventually, if their merit holds, then they come back. Okay, you can't not do this with any random stock. They say never buy, never add to your losing position. Right, but what if the stock is a good stock and you're incrementally putting on a small amount of shares that's not going to put you into a situation where you're getting margined out? There's nothing wrong with that. Okay, like for example, buying a few shares each month, no matter what the price, right? That's going to average into you. You're going to build a nice position over time, and you're never really going to feel a lot of pain. Okay, so let's see where I'm pretty much answered everyone's questions. I'm going to wrap this up here before I start talking for 2 hours, DJ. Kev, I'm waiting for this overall market to pull back. I'm afraid of a stimulus bill won't allow that to happen. Well, you know what, Kev? No matter what, Stimulus bill, no stimulus bill, whatever, there'll be a pullback. It's just part of the cycle. Some other reason will come out that'll scare the market. Okay, some other reason that we don't know about right now. Next thing you know, everyone will be talking about it. Okay, no one saw back in no one saw that March low coming back in February or January. No one saw it coming. Okay, and we were saying at that time when the market was pushing highs. Right, let's look back. Let's take a look at the S&P. I'm gonna leave you guys with this. Okay, let's go back to that S&P real quick. And let's take a look. Let's go back. Let's go back to January, okay, of a year before. And let's go back. What was going on at that time? And forget the March low. No one saw it coming. Look at this. Everything was beautiful. All right, January, right? February, little hesitation there, pullback. Beautiful market, right? Beautiful market. No one saw that coming. No one. Kramer didn't see it coming. None of the experts saw it coming. No one saw it coming. But I can tell you one thing. If you watch my videos from that time, or you look at our analysis, what do we say? And I say this even now. Whenever we're at highs, okay, you have to be careful. You have to be cautious because when you're at a high, a low is likely to follow, not more highs. So risk is higher at highs. Now, did I think we were going to do this? No, I didn't know we were going to do this either. But I at least knew enough not to be going crazy buying stocks at highs. Okay, that's just effective behavior. It has nothing to do with predicting, which is what everyone wants to do. So that's the thing, right? So keep that in mind. Something can come out of nowhere, and next thing you know, you have market opportunities all over the place, like we saw in March and in April. And you're not going to be able to act on all of them, right, unless you have unlimited capital. So you have to pick ones that are going to deliver, that have the potential that you're looking for, stocks that you've been tracking the whole time, stocks like Square, stocks like PayPal. You know, you have these on your radar. These opportunities come about, and now you can start, you know, putting money to work in your inventory. But inventory is not the same as a swing trade. You must have a different mentality, and you have to have a different process for evaluating each type of trade. A lot of people don't do that. Some people don't even know the difference between a day trade and a swing trade. And like those are the people that, you know, pretty much react to stuff, and they're on Robinhood. They're looking to gurus to give them, you know, a trade idea or whatever. And you can't work that way. Okay, or at least not for consistency over time. So, okay, so let's see where we are here, back on the chat. Okay, DJ, is this a new thing which I just came to know? Popular gurus on TikTok, they're sharing the clips. Oh, yeah, well, I'm not surprised. I'm surprised, you know, TikTok is a platform for usually a younger crowd. At least that's how it started out. Maybe it's changing. Yeah, I mean, they're probably, you know, one thing I learned about TikTok is it's a good place to share this stuff. You know why? Because there's no one on there sharing it. So there's a lot of demand and no content. So like, for example, if I was putting my videos on TikTok, I'd probably get a lot more views. But who's viewing the videos on TikTok? I mean, am I getting 15-year-old kids, or am I getting, you know, people with money to invest is the question. Do I want, you know, if I want 10,000 15-year-old boys following me, great, but we're not going to get many customers out of that. So, you know, I don't know. Anyway, yeah, right, Kev, right. So that's the thing. It's about, like, again, this is all about just having the right effective behavior, as I like to call it, the right mindset. You know, how you should behave during certain market situations. There's an effective way to behave. So, oh yeah, they'll probably hate me on TikTok. If TikTok is full of younger people, and it's also full of like reactive Robinhood type traders, they won't like me at all. I'm very unpopular with reactive Robinhood type traders because they want to be lied to. They like lies. That's what they like. Lies deliver hope, and it appeals to our emotions. It appeals to our gambling mentality. That's why they like lies. You know, if I was going to talk about action, I can make up all kinds of stuff and really get exciting, you know, and then no one's going to make money. So we're more interested in helping our members have the confidence to make their own decisions and come out ahead, you know, because we know what it's like. So anyway, all right, enough of the ranting. Um, I'm going to leave you guys with that. I was going to say something, and now I can't remember. I was going to say something about, oh yeah, I'm planning to do a webinar uh, probably on Saturday or Sunday, most likely Sunday. The webinar topic is going to be on psychology. We're going to go back into market psychology. We haven't done one of those in a while on market psychology, but my goal is to tie the psychology into particular trade patterns and particular trade setups. But when I'm talking about psychology, I'm talking about behavioral finance, where there's certain bias in play that that's going on inside of our minds relative to what we're seeing in the market, right? So I want to spend some time on something like that. I think it'll be very informative for people to get a sense of that, because it's it's something that's not addressed very often, right? Everyone wants charts, right? On TradingView, everyone wants charts with lots of stuff on them, paragraphs all over the place. That's what they want because they think they're going to learn something. But charts are really a small portion of this whole process, right? Psychology is probably the largest portion. And if your psychology is flawed, no matter what charting tool you have, you're not going to make money. Okay? You're going to randomly make money, but randomly doesn't do anything over time. So, so that's the plan. So Christian, Saturday. All right, I'll see. I'm not sure right now what day. If I could do it on Saturday, I'll try. But if not, Christian, you can always watch the replay, because you should be able to get it in an email when we register for those webinars. You should get it in your email once it's completed. Always check your spam folder on those. But anyway, that's the plan. So I just want to let you guys know. I want to let you know now. I will send out the invitation for that on Thursday or Friday. You'll get that invitation by email, and you'll have all the details. Okay. I will be driving to Texas. Hopefully, can attend. Okay, no problem, DJ. Texas. I like Texas. So anyway, that's the plan, and we'll see how it goes. All right. So stay tuned for that and look for the email. Other than that, I want to say, hey, thank you everyone for your great your great participation and your great questions. Again, if you're new to Greenbridge, please make sure you like the video here so that it's encouraging for me. Also, register for the channel so you get an email notification when I do one of these. And check out greenbridgeinvesting.com. We have swing trade signals by text, by email, portfolio management ideas, which I talked a little bit more about here. And we have a chat room when we're also sharing our trade ideas and updating trade ideas as well, right? Remember, Trade of the Week. And by the way, you sign up as a free member, Trade of the Week. It's tomorrow, right? When we have our Talking Market show, we're going to announce a new one. Sunrun is doing okay. That was the previous week. And Fastly is doing okay too. It was the week before. I didn't get to go over those here. But anyway, tomorrow will be a new Trade of the Week. All right. So make sure you're signed up as a free member, and you'll get that in your email as well. All right. So anyway, again, thank you all. Hey, no problem, everyone. I really appreciate your participation in the questions and the compliments. Thank you all, and enjoy the rest of your day. I'll see you next time. Thank you for watching.